Energy and chemicals company that's Sasol released its first half results this morning. My colleague David Williams sat down with the company's CEO, that's David Constable. He started off by asking him about the impact of the oil price, which fell on the business.
Yeah, we obviously, like you say, do scenario planning on all of our projects and stress test our investments across a range of factors, including obviously oil price when you're potentially building a gas to liquids plant, and even a cracker, because oil price can affect your chemicals prices obviously and your feedstock. So yeah, we stress test well below that 100 mark and well below the 90 mark. Did we stress test at 40, 45? No, obviously not. That was not in the cards at the time. However, I will say that even though we didn't predict exactly when it would drop or how far it would drop, we knew it would drop at some point. And I think that's the good news that that people should take away from this who are interested in Sasol, is that we've had a business performance enhancement program in place for the last 2 years in order to not just hang our hats on a high oil price and a weak rand. And it's not fair to shareholders. So we really, if you will, took the bull by the horns with our enhancement program and restructured, new operating model, cut the businesses from 16 to 6 and functions from 40 to 19, a whole host of work streams that is cutting out now, as we've announced, 4.3 billion rand annually out of the company. So that gave us a good foundation. We say that we were fixing the roof while the sun was shining, because you got a lot of pushback internally and externally on, what are you doing? It's just a wonderful time. But we realized that we can't, macroeconomic shifts will and will continue to come. And obviously with OPEC on November 27th, taking the decision to go after market share at any price, couple that with U.S. shale oil production strong and I'd say a slow global growth, put that all together, and that's what happened with our oil price through the end of the year. And fortunately, like I say, the good news is we've got a strong foundation to protect the company.
So there's still a lot of stuff to come with the oil price in the next financial reporting period.
Correct. We believe that that the second half of the financial year will be tracking along the same lines, using the same oil price that we see currently. So that will obviously, for the full half year or the second half of the financial year, continue to impact us.
Yep. Looking at what you call your cash conservation target, 30 billion to 50 billion is the order that you're looking about. I mean, I know it's a big company, but these are big savings.
Right. And required. Like I say, the enhancement program is there as a foundation, but it's not enough at these types of oil prices, because we want to protect our cracker in the U.S., protect our targeted gearing, obviously, as well, and pay a reasonable dividend. So cash conservation, cash protection is the key right now, 30 to 50 billion rand. And we've got the work streams in place. We jumped on it immediately. We jumped on, we called it if you will, an oil price response plan. The response plan started the first week of December, so just a week and a half after the announcement at OPEC. We got right on it before the holidays. And the work streams, 4 work streams, cash cost reduction, capital project reduction, and then gross margin working capital improvements, and capital structuring. So the dividend, moving to a dividend based on cover range versus the progressive dividend. So all these things have been worked on. We've got the target set. The team's very comfortable with that target, by the way. And it has to take place in the next 30 months, because that's where we see the maximum spend on our cracker in the U.S. So it protects the gearing along those lines.
So is there not a danger that if you hold it and then you start again in a year or two's time, you're going to have to spend more money that you would have spent in terms of equipment, suppliers, labor, all that? Yeah,
we've looked at that. As far as, I think we had to write down about $2.5 million US. We're just in front-end engineering. So just some engineering work had been started, and it can be reused, obviously, based on the final size that we pick. And again, if we go forward, we can bring that off the shelf and keep going without losing too